Good evening and welcome to tonight's edition of Fact Sheet live on ETV, live on Facebook, Twitter and Instagram, also live on Nisim 95.9 and 100.1 in Bogotanga and Tamale respectively. On Tuesday evenings like this, when we sit here, it's about our nation and trying to set an agenda for conversation which mainstream media would have been discussing and sometimes even social media. And I try my possible best to give you a hint or clues as to the issues on our table that we'll be discussing. Tonight I'm going to be using a different approach. So whilst you're watching us in your homes, you'd guess where the conversation would be going. And I want to set the ball rolling by taking you to the website of the Bank of Ghana. There's some very critical data that they share on the website of the Bank of Ghana. And this is the data which is on the website of the Bank of Ghana. I'll reference some other news headlines that came throughout the week, last month as well, and then would guess where your thinking has gone so far. So on the website of the Bank of Ghana, you find there that they have posted that the current monetary policy rate is 24.50. It's also stated that the current inflation rate is 33.9. There's an inflation target of 8.0 plus or minus 2. This is information that is on the website of the Bank of Ghana. I'll quickly take you to the Ghanaian Times, a report which got all of us talking and being concerned, especially at the time when Ghana has started a conversation with the IMF, all in a bid to get some $3 billion from the IMF to augment our situation we find ourselves in. Ghanaian Times report the story with the headline, World Bank classifies Ghana as high debt distressed country, debt to GDP to hit 104%. Remember, prior to that, Ghana's credit rating had been downgraded by Moody's, by Fitch, by S&P, or from CCC to CC. And that became a subject matter for conversation, considering that the government had protested some of these ratings which had been given the Ghanaian economy. Several other African countries as well have been complaining about these, credit rating agencies and the ratings they have given the Ghanaian economy. But is that a reality on the ground? Seeing especially that the numbers that are playing out don't look favorable for Ghana. For instance, at some point, the cedi was exchanging for $1 around 10 Ghana cedis for $1. At the time, the government hinted that as a result of a loan they had secured from Parliament, approval of a loan they had secured from Parliament, some $750 million, they were going to ensure that the cedi stabilizes against the dollar. Today, if you check, the figure is just around the same figure, even increased to some 11.0 or so. The government has been taking some steps, as much as it is having its conversation with the IMF. They have cut their expenditure by some 30% in terms of, government officials, how much they spend, the fuel allocations, their travels, and so much more. The government has been chasing these black market dealers in the dollar. Several of these forex bureaus that are operating without licenses have also been shut down. Several other steps that the government has taken, which I want to highlight a few, and then I'll introduce my guest to you so we can begin the conversation. Government, through the Development Bank Ghana, has been issuing some funds to some businesses so as to boost and to stimulate the Ghanaian economy. You'd also realize the government introduced the e-levy. As for its performance, it's another matter for another day. We're also talking about the government's effort to ensure that it buys gold directly so as to ensure that we have the stock of the mineral. All these things, have they sufficed? With the $3 billion, dollars from the IMF, solve our problem? There is also the question of the restructuring of our debt, which has also become a subject matter for conversation. Tonight, I'm sure you have an inkling where we are going with our conversation. It all has to do with the Ghanaian economy and how to salvage it so that we can have confidence enough and investors can invest in our economy. I welcome you to tonight's conversation. My name is Samuel Shen, and when we are back, I'll introduce my guests to you. And you're welcome back to Fact Sheets live on ETV tonight. My guest, Mr. Julius Jima, who is a financial and tax analyst. He'll be sharing his thoughts with us. Mr. Christian Techijan is a banker. He would also be sharing his thoughts with us via Zoom. And I will be joined via phone by Dr. Walanyo Mensah, who is an economist, to also seek his views. Gentlemen, good evening, and thanks so much for joining me tonight on the show.
Good evening.
All right, so let me start with you, Julius. The debt stock, which we are told is over 400 billion now, as we speak, and the fact that we are told that our debt to GDP would cross 100% by the time the year comes to an end, and we being described as a high risk country in terms of our debt portfolio, and all these issues put together, what does it say about our country?
Very good evening to our cherished viewers, and then good evening to yourself once again. I believe we are back, and then I like today's topic, which is a little bit more technical with its economics and then what is actually happening in the economy. To start with, debt. We have to go back to our budget, because anytime government prepares its budget, there is a component of a deficit which arises to the debt. So what are the characteristic of Ghana's budget is that we've always been seeing deficit. As we speak, I'm yet to see a particular government that will come out with a budget and they will be having a surplus. That would be a very, very, positive economic indicator. But as we say stands now, there is nothing like that. So 2022 budget has a budgeted revenue of some 100 billion and a budgeted expenditure of some 137 billion. It was revised in the mid-year review around July. So to work with this data, it means that government has already created a deficit of about 37 for this current year. And the public debt has also been accumulated from government in and then government out, not this particular government. So there is a component of a deficit which government must finance to be able to meet its objective. Without that, government will not be able to meet its objectives or its expenditure line. So what should government do? That is the question. And we know that government don't also work, so to say. Government sells taxes. So the only thing government can generate revenue is through imposition of taxes and collecting money back from the system. So what government must do is to create that friendly environment for businesses to grow. Because when businesses are growing, your GDP or the whole economy grows, and then you get your economic growth. When businesses are growing, it means that they'll be paying more profit tax to you. So you collect the money, they expand their business, they employ more people, you are collecting PAYE. So these are some form of direct taxes government also obtain. And then when you consume goods and services, there are indirect taxes. So this is what government does to make money. Now, the revenues that are coming is not enough. So government must look for alternatives to be able to add up to the revenues that it is receiving. And therefore, what government must do is to go and then borrow. That is why we have arrived at this public debt. Over the years, per this current government assessment, what they've been doing is to go external. So we saw Euro bonds and then a lot of that we have. But over the years, our economy has not been that good, from down to 2017, 2018 when COVID came, and then the current big deal, which is the invasion of Russia and Ukraine, which has affected so many economies. And this is very critical. Like as a student of economics, what we are seeing is that we should begin to look at what is really happening around the world, so that we'll be able to understand the global perspective and its impact on our local perspective as well. So government is not being able to penetrate the international market to raise euro bonds. Therefore, it has to look within. And then with the various downgrades that we've seen from the various international credit agencies, it means that our books are not simply not good. Therefore, As it stands now, our total debt is being recorded as some 402 billion, as you've already indicated. And our actual or real GDP, GDP simply means the value of our economy. It
Yeah.
stands around some 600 billion. Now, when government engaged the IMF, they were looking at how government to be able to sustain their total debt. If
Okay.
you should come to us for additional money, how are you going to sustain it? How are you going to pay us back without affecting your economy? We've seen the likes of, our economy, inflation hitting us hard. Cost of living is really going high. Cost of fuel, everything is being affected. So these are some of the indicators in the economy that is really pushing the public debt stock to a higher level. At the moment, what government sought to do was to first impose the e-levy and at the same time went to IMF. I mean, we've discussed the two options over the
Yeah.
period, but now where we are is the IMF.
Okay.
Are we going to get the needed revenue or the needed payment of balance support that government indicated? Meaning that, and I've been talking about the way our traditional economy has been, which we are hoping that government will be able to refocus from the traditional way of managing our economy to a more conventional approach, which we'll discuss that. But what we've seen is that what is payment of balance support? It means that government is importing goods and services or even capital than exporting. So it means we import more than what we export. And what is supporting that? That is just our economy. Are we producing more than we have? Are we opening up companies or factories as government have been preaching all? And these are things that will culminate to, cushion your economy.
Yeah.
And then you'll be able to have that liquidity and then investor confidence in your economy to be able to bring back that confidence, and then, you increase your revenue
But
stream.
that point about revenue generation and all. So there's one district, one factory. We know that for the extractive industry, for instance, in the oil industry, we know that the government had a windfall, huge windfall as a result of the happenings across the world. Just last week, I was reading a piece where we're told that the OPEC countries had decided to cut back on production, which is going to inure to the benefit of government. So all these windfall margins that came over the period, are we saying that they could not have pushed our revenue targets?
Yeah, so that will stand to reason that well, the windfall is coming as a result of the exchange rate, because as at the time the budgeted price of crude was a little bit lower, and then now it means that the dollar is going up. So those are, but the thing is that what are we even using those monies for? That is a windfall. They don't. It's something that government can use to cushion its revenue, but it is not really sustainable compared to when you have a very robust economy that you are all the time there's turnover, money circulating, and then you are getting your real revenues. Some of these things are temporary measures. When they come, it stands to just cushion your economy a little bit and help you to stabilize your currencies and all that. But they are not long-term measures that is going to really help the economy to consolidate the gains that government is really looking at, and then the growth in the economy. So now the discussion should be on our economy, where we'll be looking at more export than import. Yes, other school of thought are in the discussion, the likes of Guta, and then last time we had conversation with Dr.
Obeying.
Obain. So these are things that I'm beginning to realize that.
But even with the point about the importation, there's a theory that suggests that if government is looking for money, and then government allows for more importation of goods into the country, the more goods enter into the country, the more government gets the revenue it is looking for in the form of taxes. But where the taxes are so high, and so the businessman is deterred from importing more because he hasn't got the money, considering the monetary policy rate and how it's affecting the interest rates they are paying at the banks. Then it is government that is rather constricting its own source of income in terms of taxes.
Well, so I think this will take us back to the benchmark, values that was discussed a year ago.
Yeah.
The issue here is that people were importing more. And for that matter, there were a lot of trade volumes at the port. So the policy was that, look, that is a proposal presented by Guta to government. There is no need, trying to increase your custom duties and import duties. Whereas, once we import or bring in the goods that the economy needs, it means that we are not able to produce.
Yeah.
So there are goods that are relevant. We have to bring them.
Yeah.
If you lower your taxes, your custom duties and import duties, it means that the volumes, the trade volumes at the time, you'll be able to clear them. And then people will be able to, get money to pay. When they pay, it means that you get your revenue. And at the same time, you get the goods into the system. So those were some proposals and, between Guta and AGI. But the discussion is that what are we producing, and are we able to produce to meet the local consumption or the local demand before we even begin to look at importing them? But as our economy stands now, we are being hugely affected by imports.
Now, let me just quickly dash to Chris via Zoom and pick his thoughts, especially when it comes to the monetary policy rate, which was recently pegged around 24.5%, and how that impacts on the banking sector. Remember, recently, there was a downgrade of about some 3 banks by Fitch. All had to do with the exposure to government business. Chris, this monetary policy rate adjustment to 24.5%, does it in any way help in easing the already burdened businessman?
Thank you very much for having me, and good evening to you and all our viewers. With Bank of Ghana setting the monetary policy rate, which currently sits at about 24.5%, what that means is that definitely cost of borrowing is going high. If you visit the banks now, you'll be taking credit at around 35%, and that is very, very, very high. But when monetary policy rate goes high, it comes with its effects. And for me, the government is targeting inflation by increasing the monetary policy rate. But then in the long run, it is rather a deterrent, especially to business people, because once credit goes high, that is, if you want to advance credit or you want to avail credit, it becomes expensive. Goods and services obviously becomes expensive because the businessman is a rational economic agent. So if, for example, he's going to borrow, lest I forget, treasury bills are around 30%. And basically what the banks do is that they do borrow from the surplus sector and then give it to the deficit sector. So now they'll be borrowing from the surplus sector at about 30%. They need to spread a margin of risk on it. Let's say a margin of, let's say, about 5 or 6%. That means the borrower that is coming in is going to borrow at about 36 or 37%. That is very expensive. As a rational economic agent, he also wants to place his margin on it, let's say just about 3-4%. And so once credit becomes expensive, the margin spread in terms of profitability is also spread on the same goods. Operational cost also goes high. We are very much aware of September increases of utilities, light and water bill. All of these things are contributing to operational expenses getting very high. So at the end of the day, the cost in doing business becomes so high that as an agent or a rational economic agent, that is placed, the margin that is also placed on the cost of the goods becomes expensive for the consumer to also buy. So that is what really happens. Let's also look at the rate of exchange that is also worsening.
But even before you go there, Chris, the point you made about monetary policy rates and the fact that you said that the Bank of Ghana is seeking to target inflation. But if you look at the inflationary figures, you would agree with me that the inflation is not being driven because there is more money chasing fewer goods. It's as a result of certain factors, and these factors cannot easily be controlled by the adjustment of the monetary policy rate upwards. So is it not counterproductive?
Yes. So the causes of inflation, we've got the the push factors and we've got the pull factors. Unfortunately, the Ghanaian economy, what we are experiencing is actually not the pull factors, it is the push. So in Bank of Ghana, trying to mop up excess cash within the system in order to reduce inflation, for me, it's neither here nor there. That theory is very questionable if you want to apply it onto the Ghanaian sector, because like the monetary policy rate going high, I did explain earlier how it's going to impact on cost of borrowing also getting high. At the end of the day, all these costs that are getting expensive will be placed on the cost of the goods and services that are going to be rendered or given out. So at the end of the day, the goods will continue to go high. So for me, there is no theory that is applicable in the Ghanaian situation where you say once you increase policy rates, monetary policy rates, it will mop up all the excess cash and therefore it's going to drive inflation down. Even if you look at this year, every time the monetary policy committee has met, they have actually increased the policy rate minimum by 200 basis points. But what has happened to our inflation? It keeps going high. It means that solution they are trying to propound as a solution to solve our inflation problem is really not happening. So it is high time we revise the notes to the point that hiking policy rates is really not the solution for Ghana in order to drive our inflation down.
Now, let's talk about the exposure of these banks to government treasury bills and co. Because you'd realize that when Fitch downgraded these three banks previously, I think last month or so, one of the key issues has to do with the business transactions they have with government, and the fact that because government is exposed, they are also exposed, and that if government is unable to meet its commitment to them, then it would also infer that their commitment to their clients would also be a matter in question. How do we deal with that situation where banks have now become risk averse, regardless of the monetary policy rate and the interest rate at which businessmen have had to borrow from them?
All right. So presently, treasury bills are doing over 30%, and inflation is also doing somewhere around 34%. So with the credits, even those that are backed by the sovereign guarantee, the government itself is actually struggling with liquidity to the extent that our debt to GDP is about 84.6%. And the IMF is projecting that by the end of the year, it's going to be over 100%. So it means the sovereign bonds or the sovereign guarantees, the sovereign bonds that are actually issued by government, that you will have said was risk-free. It's no longer risk-free because government is really, really struggling. Understand today, the IMF is trying to look at the debt sustainability analysis of the country. So when it comes to the government bonds, I mean, it's nothing to write home about. If you look at credits that are also backed by sovereign guarantee, government is struggling to actually raise any form of liquidity. Government is not liquid, government doesn't have money. So on the deposit side, we have a challenge. On the credit side too, there is also a challenge. So it is not out of place if some of these credit rating agencies will downgrade these three banks that we did mention earlier, because the business that they have with government is really so high and it puts them at risk. There's been discussions of some sort of haircuts or some sort of coupons being issued, renegotiation, restructuring of the debts of government and all of those things. It remains to be seen. There's been a 5-member committee that includes all major stakeholders. So we are yet to see the roadmap and what they're actually going to come up with. But as it stands now, government business is not looking good, whether it's got to do with deposit in the form of bonds or it's got to do with credit in the form of sovereign guarantees that are actually coming through.
Chris, thank you. I'll come back to you with the question about the exchange rate and how we are grappling with, the dollar and the cedi, considering that we are approaching the final quarter of the year and that businessmen would be going for their wares and goods to sell and make some money. But let me come to the IMF question. Shouldn't we by now have an inkling what government is taking to the table in terms of the IMF program they are taking? Because this is a homegrown solution the government is taking to them, and it would be for the IMF to oversee the implementation of these programs. Where do you think government's focus must be?
I think when it comes to the IMF discussions, I'm a little bit careful because when they've asked for a debt sustainability analysis, and then what it does is that, they are still...
Okay, so Julius, what I'm going to do is to pause you a second because our third guest is on the line. He's joining us via phone. Doc, good evening and thanks so much for joining us.
Good evening and thanks so much for the opportunity.
I'm hoping you're doing well today, sir. Hello, Doc.
Yes.
So the question that I was asking Julius, I will throw that question to you if you did hear me. I was concerned about what government is intending to do since it's a homegrown policy that we are taking to the IMF for them to supervise its implementation. Which direction should be the focus of the Ghanaian government?
Well, thank you very much once again. I think by and large, government at this juncture, which has no option than to kowtow to both internal and external forces. I believe that the government will do everything possible to convince the various stakeholders as far as money or financial resources is concerned. The government will do everything possible just to have access to money. But I'm yet to be convinced about government's ability to spend financial resources prudently. And so for over the past 12 months, I've been monitoring government's attitude towards financial management. And a major problem has to do with mismanagement of resources, misapplication and misappropriation of resources. So there is total financial indiscipline within the local economy. Now, if these various attitudes are not corrected financially, then no amount of money that is coming into the economy can yield any better dividends. Because the attitude of government is showing that they are only interested in having access to money and not as to how effective and efficient these resources should be used for. For over the past 7 years, we've been able to have access to Eurobonds, billions of cedis, which this money should have gone into capital investment. By the end of the day, these resources have gone into recurrent expenditure. And so that is why we are where we are today. I think and believe government should be more responsible in planning and quite disciplined in its all activities, because the time we all feel that criticizing government will make government feel bad, majority of Ghanaians are suffering. For how long can we continue to behave in this way? We are not hypocrites. So let's tell government the truth. When government applies the best principles, it provides us the best alternative course of action, and there is improvement in the livelihood of the ordinary people.
All right, Doc, let me ask if you have a radio set beside you or if you are close by the TV, if you could move a little bit away because we are getting some feedback from your end. But on the matter of your lack of confidence in the ability of government to stay on course if it's able to secure this $3 billion that we are seeking to get from the IMF, would the presence of the IMF itself not suffice in terms of the strict adherence to the usage of these funds?
Well, at the end of the day, I was looking more at the various approaches for which government is going to use IMF resources. But I believe that the having access to IMF funds, IMF itself is not a developmental agency. So it's only there to stabilize the economy, not to even make the economy better, but to stabilize the difficulties that you are facing. And so the IMF conditionalities must be the topmost priorities of every government. For that matter, the government of Ghana fails to tell Ghanaians if they have gone in for IMF bailout, what are the fixed conditionalities? One of the fixed conditionalities is that the utility bills must be increased, not less than 35%, meaning that water bills, electricity bills will be increased. Talk time tax will be increased. There are going to be an increment in the petroleum products, so gas oil and gasoline will be increased. There will be an freezing of employment into the public sector. If you put all these indicators together, there will be more hardship for ordinary citizens. Is government thinking about this, or still thinking about increasing the policy rate of getting an intermediate form of revenue by collapsing the entire economy?
Well, Doc.
So there are issues about IMF will never solve any problem today or tomorrow.
Let's avert our minds to the condition of the world, the COVID-19, the Russia-Ukraine war, and its impact on world economies, because there have been predictions that if we are not careful, we may run into a recession again across the globe. And so you think that the IMF would not be mindful enough in terms of its austerity measures, its austerity demand it will be making on the people of Ghana if this program comes on stream?
I believe that the government is playing a smart role, giving a dog a bad name in order to hang him. If I may bring itself, government is going to hang our woes on them. The basic principles is that IMF is not a development agency. And for that matter, if government decided to go in for IMF bailout, it's really going to worsen the plight of ordinary citizens. The Russia and Ukraine war, for that matter, the COVID-19 has brought more blessings to the economy of Ghana than a curse.
Oh, really?
I will explain. The Russia and Ukraine war have a major significance. The major significance is that the crude oil at the international market has increased, meaning that Ghana is also a producer of crude oil. Our profit margin as far as the crude oil is concerned has increased astronomically compared to what has been projected in our budget. From that time up to date, have you heard the finance minister telling us about this astronomical profit we are making? Now, the COVID-19, the kind of resources in terms of financial assistance that we have received into our economy is more than the revenue that we have generated within the local economy per annum. How can that be a negative impact to a developing economy? So government is invariably not utilizing these resources well. Instead of turning these resources into capital investment by established factories and industries, we have decided to use this money for recurrent expenditures, including flashy programs, and whereby these programs are not sustainable, so the economy is in crisis.
All right. Doc, I'll pause you there and take a quick breather. And then when we come back for our wrap-up comment, the windfall issue I was raising, that's exactly the point that Doc was making. But I'll raise your issue about the permanency of the windfall that Doc was talking about. And so I urge our viewers to stay with us, even as we take a short breather and be back. And you're welcome back to Fact Sheets Live on ETV, live on NISIM 95.9 and 100.1, and live on Facebook and Twitter as well. Several comments that are coming through. I have 10 minutes to end the show. I'll give you 2 minutes, Julius, for wrap-up comments.
Much, Ishen. I think that looking at the moment our debt portfolio levels, where we government at the moment has some domestic debt and then external debt. Government is also looking at the discussion with IMF, which they are so much interested in our debt sustainability analysis, which we are looking forward to see the report on that before we would comment, because sometimes as analysts our comment, our speculations affect some of the agreement and then discussions, which doesn't inure to the benefit of government. So we have to be patient for them to complete that analysis report before we can come in. What we are looking forward is that some of the items that is really taking government money, going to IMF, those will come on the table so that government will be able to, have a review of its own policies. Some of the policies are good, but if it is taking a lot of money from the system where it will impact government business, then we hope that those areas should be reviewed for government to have that flexibility to still have enough cash to be able to go over the activities of the economy. So we pray for the best from government negotiation with the IMF, and then in the end we'll be able to produce debt sustainability analysis that will be in favor of Ghanaians. Mind you, when we will still come to the budget lines, Doc talked about compensation, which is, there are three items that is very huge, taking government money. Compensation, which is payment of wages and salaries, interest payment, and then grant to other government units. These are earmark funds, and for these things, they must go in order to keep government afloat. But there's a lot of money going into those areas. That is why Minister of Finance talked about some of the reviews of, fuel coupons, and it forms part of the compensations to government sector employees. So these are areas that can be adjusted together with some government flagship policies. If it can be discussed and then some support here and there, then we'll be able to push our economy into the fiscal consolidation that we want to have. Thank you very much.
Thank you, Julius. Let me pick the final thoughts of Chris on the conversation about our economy. Chris, let me pick your final thoughts.
Okay, all right. Yeah, I want to put my final thoughts aside a bit, then I respond quickly to Dr. Mensah's assertion of the windfall in the crude prices that should have accrued to government. We shouldn't forget that Ghana's economy is basically import driven. And there are some items, food items, that include wheat that we import basically a lot from that region, the Russia-Ukraine area. We also do a lot of fertilizers from that same region. So within that space, if you look at the shortage of wheat that we are experiencing, it's become very difficult for processors like the Olams who do the processing of some of these wheat. So it's become so expensive that our farmers, that is our poultry farmers who rely on some of these wheat brands for the preparation of feed for their birds, it's become very expensive for them in running. So once it's also expensive, the eggs that come out are also priced expensively. So it has led to general increase in food prices, that is to talk about inflation and then other things. So, and we are not just enjoying the windfalls. Yes, we've enjoyed the windfalls, but in the long run, we've been net losers because of the other produce that we have to import from that region. So for me, if you ask me, the Russia-Ukraine war, Doc was saying it's rather a blessing to Ghana. But if you ask me, the net effect is actually negative. So that is my wrap-up message.
I'm sure Doc would want to respond to your view expressed. Doc, I'll give you the final bite under 2 minutes. Hello, Doc.
Hello.
Yes, I'm giving you the final bite, 2 minutes.
Well, thank you very much. I think by and large, we need to formalize the informal sector and make the economy more robust. I equally respect the views of the professional panels out there. But I still maintain my point that the Russia-Ukraine war and that of the COVID-19 has been a blessing more than a curse, based on the feasibility and the research work that we have done. And I believe that government should be much more truthful to the ordinary citizens by telling them the truth. These are all realities that government even have at this own disposal, and there is no doubt about it. But it's because the Ghanaians continue to put much pressure on government. So government is trying as much as possible to shift blame. But I don't think managing an economy, you need to be massaging the economy with political information. You just need economic reality.
All right. Doc, I'll thank you for your views tonight. I've been joined tonight in the studio by Mr. Julius Jima, who is a financial and tax analyst via Zoom, Mr. Christian Techijan, who is a banker, and Dr. Wolanyo Mensah, an economist, join us via phone. Gentlemen, I thank you for joining me tonight on Fact Sheet. There's so much to discuss, and we will continue the conversation tomorrow morning, God willing, on the Happy Morning Show, because you see, there's a question of the external debt and then the issue of the debt restructuring and its implication for us. People's investments are with us. And so if we decide to restructure them, what does it mean for us? Especially with the credit rating agencies looking over our shoulders. Do we settle the external debt first, or do we settle the internal debt first? That's all issues that tomorrow morning on the Happy Morning Show, obviously, we will touch on. And so we encourage you to join us at 5:30 a.m. My name is Samuel Chen, and I wish you a blessed evening.